So now is the time to stay on high alert because yes, the market is bouncing, but is the bottom in? Well, I'm not so sold on that as of yet, and I'll show you exactly why. I really think that you guys need to take a higher time frame perspective of the market and take a look at things from a zoomed out perspective. When things move quick, you want to zoom out, and there is a whole lot as well fundamentally that's going on with regards to different massive funds. And these are things we need to be careful of. You can see, of course, on the daily, there have been massive bounces. And that's what you would expect when you're in the middle of a capitulation event. Then when there is a relief rally, it's usually met with massive upside moves that may fool many people into thinking that a new bull run is beginning. But I would like to caution you to just take a step back and really look at things properly. And we're going to go through that today. So first and foremost, this tweet over here says, hearing from several founders privately that their treasuries are wiped out. The contagion is only just starting. And he says, yeah, wow, lots of projects are reaching out to me, telling me that they got wiped, they can't make payroll, and don't know what to do. It's unbelievable. And it is unbelievable. And I know that we need backed up evidence because this is just opinions at the moment. It's like, well, somebody told me that, but where is the actual evidence of that? And I will show you some of that in a moment's time. But first, I want to touch on the charts. And this is, again, one of the most important because you have to take a step back for perspective and have a look at the previous yellow circles outlined at the bottom. When these moves just got going, the volatility has a massive way to still go towards the upside. And we're only just reclaiming the orange line now, which means this is only just the very start of this move. And so far, the trend is towards the downside. Important levels have been lost, and that means you should expect continuation to the downside with the rest of this move. So this chart over here, we've broken through the middle Bollinger Band, the low Bollinger Band over here, and now these Bollinger Bands will start to expand out and open up for that next move. Everything is bearish on the weekly chart, made a new swing low. That's bearish. You would know if you are familiar with trading, making a swing low is a bad thing unless this week in the next 2 days rallies aggressively to the upside and this gets left as a massive wick. Then it might look like some sort of a Wyckoff accumulation pattern with the final spring phase, is what they call it in the Wyckoff world, is the spring phase where you spring off of that level, taking out the previous low, and then you can start a new run. But so far, it's definitely not looking like that to me. And the only way that you would know is by waiting for confirmation to reclaim key levels. And so far, we are nowhere near reclaiming those key levels. We're completely below them. And I would definitely lean bearish, expecting continuation to the downside since we caught below all important moving averages. RSI is still trending down and has rejected from a very critical level. So moving on, I did draw this chart yesterday and I made a whole show on it on Friday. So if you haven't watched that, go back to the previous Friday, a week ago, where we went through and we said the probable outcomes. What I've done now is I've neatly outlined all the potential ranges within this chart. So have a look at this. Pretty much range 1 is where we spent most of the year, right? As I'm sure you can all see, we spent most of the year in range 1. Then we broke into range 2 and we've already lost range 2 and we're going into range 3. I also have that overlaid, of course, with the different psychology phases that you go through within a market cycle, starting off with hope and ending off with depression at the end phase. And then you go back into hope and a new run starts to begin. So the question is, when you zoom in, let's take a closer look at this. Okay, we're right here in phase 3 at the moment. And as I just mentioned on the weekly chart, a strong bounce from this level back into the range 2 zone would indicate a potential to go long. Now you could place your stops underneath, and then you could say maybe that is a major local bottom. I'm not saying a macro long-term bottom, but a major local bottom, and then you'd be trading this as a range trader back into higher levels. And I will give you guys these zones in case you want to map it out on your own chart. So what I'm going to do, if I click on these over here, it's kind of hard to do. I'm going to have to post this on Twitter. It's going to take too long on the show now, but essentially that's what I'm looking at. I'll give you the levels. You can look at it on Twitter. Follow me on Twitter. The link is in the description below as well if you don't already. And then you can follow along over there. So bullish case, you're watching for a reclaim. You want to see it hold specifically above this 19,000 level. A little bit of leeway. You can probably say about 18,800, but to be safe, just round it up. Call it 19,000. Bounce back into that zone, hold that level, and then you can start to flip bullish, targeting the mid-range, and then after that, the range high. On the other side of the spectrum, what may be happening, which is a very scary thing, is that we are going, well, we're stuck within range 2, right? This is range 2. Let's just quickly outline exactly. This is range 2 over here, from there to there. And then this is range 3, which is from there to there. So we might be falling into range 3. Range 3 lies between 19,000, and if you move this down, it would be all the way down to the lows of 2017, which is around $3,700. I don't think that we go that far, but you never ever know. Mid-range, which I definitely have as a strong target, is at $11,500. And to confirm that we're going to this level, you would want to go onto a lower time frame. And I think good enough is a daily. So we move this onto a daily and we look at it like this, right? You can see what the price action is doing over here. You would want to see now that this area is underside resistance is going to reject and flip into a resistance zone. And that would look something like this. Price would come up and start to turn, and may even peak over here, but then you have the typical over and under scenario, over the key level, back under that key level, touch it again, and then that is your signal to short the rest of the way down to the 11K region. That is my expectation. That is what I think, by the way, is the most likely scenario. And then longer term, I don't really want to make any longer term calls because I'm not 100% sure what will happen. But if you do look at the Wall Street cheat sheet, you do have to eventually come into a depression phase. And if that were to take place, I would imagine then you'd come around here and then you might consolidate around that 10 to 15K level. And I don't know, do you go lower one more time, sweep about just under 10,000 where extreme panic sets in and then reclaim and a new run starts? I don't know. I'm not able to give you that information yet. We need to see how this market unfolds. I'm just taking it one step at a time, as we have been for so many months now. And I'm sure most of you are extremely grateful for watching the show and listening, because I have received a huge inflow of messages on Twitter of people thanking me that at the very least, they're 70% in cash, whereas before they would have been 100% invested. And you've missed out all of this absolute calamity over here. So continue to remain patient, continue to be careful, and any sign of a reclaim, we will go long as we did previously. Remember that in the prior weeks, when price was around here, we made this low. We came up. I told you guys I would be bidding these levels. This was all the way back in June. We bid this, we bid this, we bid this. We were buying all the way up. And then we got cautious coming into resistance over here because of this wick. And then rejected off that zone, cut our positions. We were completely out. And then we re-entered again. So when we got around here, everybody was going absolutely wild, acting like the bottom is in again. And then we started to bid. We started to bid carefully. And then I told you I'm very cautiously optimistic, but something doesn't feel right. And then we've led into the start of a capitulation phase. So try and remain patient. I do always try and look at the market from both sides, from the bulls and the bears case, because I too am 100% in cash and I don't want to get left behind. I don't want a new bull run to start and then I get left behind. But using the objective data that is in front of me, it doesn't look like we are anywhere close to that happening yet. So spent a little bit of time on this chart, but I think it's a valuable, worthwhile chart to be focused on over the next while. Now, comparing what happened in 2018 to now, so the bear market of 2018 and now, there are some similarities, and I kind of feel that we are somewhere around here, which is just the final drop. So, right, price was stuck using that $6,000 level as a base, as you can see over there. And what happened is we came through, we wicked all the way down to 5,248. price then went up the following week, almost all the way back close to 6,000. I think we got to $5,700. And then from there, it continued all the way back down to finishing off at a low of 3,200 for about a 50% drop. And now it's looking very similar. And I've said this for a long period of time. This $18,000 bottom over here has looked pretty similar to that $6,000 level. And now if you look at the candle formations, it's almost as if we are this candle over here. I know it's very small. I hope you can see it. If you're on a mobile device, it's probably a bit difficult. But essentially what I'm saying is that the next candle that follows on from this will probably be the one that takes us all the way down to that $11,000 level. So be very, very careful, because it could happen at any moment. And now is time to be on high alert. Don't get too optimistic with strong relief rallies. It's exactly what you should expect after a major sell-off. It's inevitable. And I told you yesterday that that would probably happen, and that would be an opportunity to get out of positions that you wished that you weren't in when we were selling off. And here you have that opportunity right now. So it's up to you what you want to do. I'm not your financial advisor by any means, and I'm definitely, this isn't financial advice. So looking at the price action over here, this is on Bitcoin on the 4-day chart using the short, medium, and long-term moving averages. As you would know, price is stuck below. All of them are starting to turn over. They are technically all angled downwards. The purple has already started to turn back to the downside. That means you want to be fully exited out of the market. You don't want to be holding any positions. But let's take a look at what it looked like all the way back in 2018. Again, comparing to what happened, and not to say that the market is going to do exactly the same thing, because every time is slightly different. So having a look over here, again, I see it as if we kind of within this candle, right? Price sold off, and now the moving averages are only just starting to cool over. And then you start to go down aggressively to finish off the move at that 3,200-ish level. So let's have a look. Look at the volume over here. So volume declining before the sell-off. Major volume kicks into the market. Let's go back. Over here, you see volume decline, and now it's only just started to pick up, but it hasn't got to extremely high levels. Look at the volume, even from May was higher than what we're currently at, and therefore the capitulation is most likely not complete yet. So be very careful. Now, interesting, Multicoin Capital, one of the big funds out there, they have deleted all their tweets. And there's just, guys, there's crazy things that's going on. I'm really pretty nervous for the market at the moment, to be honest with you, with the amount of mega funds that seem to be going bang. They freezing accounts, running away with money, with users' funds, with your guys' funds. It's absolutely insane. And it's going to take a long time for things to recover. I think it's a little bit ignorant to expect that in the midst of quantitative tightening, stock market, bear market, and then crypto and everything that's going on, that we're going to V-shape recover out of this, and we're just going to rally to all-time highs. I still receive messages like that. I literally can't believe it. On Twitter yesterday, I made a post saying that my key levels that I'm viewing is $13,880 on Bitcoin, because that's a key yearly level. And just because we had a slight bounce, a little relief rally, I start to receive comments that like laughing at me, saying I'm crazy, bottoms in, goodbye, have fun staying poor. And this is after being out of the market since like $50,000. And it just shows you people are just, reacting with their pain, because that is how damaged their portfolios are, that they're holding on to any hope that they can. And you don't want to be that guy. You need to cut your losses whilst you can. I'm not saying now if you had a HODL portfolio, right, and it's drawn down 80%, to be honest with you, there probably isn't really a point in selling it. Like at this point, you may as well just hold and rotate those losses into strong projects that will definitely make it, of which are things, in my opinion, like Bitcoin, Ethereum, Chainlink, what else? Arweave, probably. These are strong projects that I believe will be around for a long period of time. And that is probably all that you can do. Otherwise, if you have been in cash, you're in a good position. Now you don't want to mess it up. You want to maximize the opportunity by getting in at the exact right time, the perfect time. And I am still fully in cash, except for my dollar cost average portfolio, which is a disciplined action that you have to take as an investor, is dollar cost averaging. That's the only portfolio that I have as it currently stands. Okay, looking at this thread over here, or this tweet at least, he says, confirmed BlockFi has hired bankruptcy counsel today. So BlockFi, if you don't know, is being Peter McCormack was one of the big advocates of BlockFi, saying it's properly, decentralized yield for Bitcoin, where you can put your money into BlockFi, and basically you earn interest on that, and it's reasonable interest. And now it's looking like they basically going bang as well. If you look here, it says, is this how you say to your users that you rug them, but in a nice, polite way? And if you go into this, let's just open that up. He says that we are shocked and dismayed by the news regarding FTX and Alameda. We, like the rest of the world, found out about the situation through Twitter. Given the lack of clarity on the status of FTX.com, FTX US, and Alameda, we are not able to operate business as usual. And then they go on to say our priority is our clients, blah, blah, blah. And then he says, until there is further clarity, we are limiting platform activity, including pausing client withdrawals as allowed under our terms. We will share more specifics as soon as possible, and we request that clients not deposit to BlockFi wallet or interest accounts at this time. This is insane. This is insane, guys. This is one of the big guys within this industry. And this is why you really need to have a major part of your portfolio in a decentralized wallet or exchange. You need to get yourself a nano ledger, and you need to make sure you get it from the actual company, by the way. Do not buy these things secondhand. Consider even completely wiping them and reallocating new seed phrases before you actually use it. And that's what I do. Biswap is one of our sponsors, and they seem to be one of the legit ones that are out there. I really do recommend, if you do want to do your spot trading, you do it with exchanges like this. Leverage trading, you keep for leverage exchanges. Yeah, of course, you're not going all in on leverage, right? You only have a small percentage of your portfolio allocated towards leverage trading. The rest, spot trading, hodl portfolio, you want to buy through platforms like this. Biswap, you get 50% back from the fees that you would use on the trading or the exchange, and that gets paid to you in the Biswap token, which will probably appreciate over time as well. So have a look in the link in the description below. Check them out. They're very solid. I've been using them for probably a couple of months now. Use this link. Don't Google the link, because they might siphon the funds out of your MetaMask wallet. If you do connect a wallet there, make sure you go to the correct URL, which is this one over here. It will take you to the proper page. Okay, moving on. Inverted chart. Having a look at the inverted chart over here, we broke through the range. Remember, we had the range, bottom of the range, top of the range. We've broken through. We have 16 hours and 8 minutes left to close this candle on the 3-day chart. This will give us a huge amount of information. By tomorrow, we'll be provided with ample info with regards to what the new trend is. It does have a chance that if price had to absolutely rally from here, it could come back within the range. Remember, I've told you guys with this before, you need closing candles to confirm, and then you have a higher low and a new higher high, and you know the rest of the story. Any bounce from there, you should essentially be selling into, because you can expect that the trend is going to continue. So what would that look like? Something like this. You would sell the bounce, sell the bounce, sell the bounce, and so forth. And that would, inverted chart going up means price is essentially going down. Now, stock market is very important. As I'm sure most of you know, the market absolutely ripped yesterday as soon as the CPI data came out. CPI data came in better than expected, and consequently, you're going to get a rally, especially when markets have been selling off. So there's the stock market, massive move to the upside. This dash line, let's make it big. I don't know if you can all see that. If you're on a small device, there we go. Dash line has always been an area of interest. I didn't think that it would get there. It looked like it was rejecting and respecting this box over here. This was the ultimate liquidity grab coming in at 4,019 on the S&P 500 futures. Now, that also happens to be matching up with the 200 MA, so the moving average, the yellow one on the daily chart for that. Bear in mind, you also do have this megaphone pattern, which is coming to the downside. And if price manages to get through both of those, I don't expect that it will close there because it's going to come into that trend line resistance as well. So pretty much stock market is, my point is, reaching an area where you should expect a reaction from and probable turn back down from this zone. So I'm going to put a circle over here. Anywhere within this zone, I expect the stock market is going to reject and come back down from. Now, because you have this massive inefficiency candle to the upside, this area also has to be refilled, which means at the very, very least, market comes up. Let's say it goes as high as that. When it comes back down, it is going to refill some of this efficiency. And then at the very least, you might have a high low and another opportunity to break that level. Although I don't think that's going to happen. I think it's probably going to turn over and come back down. I still stick with my long-term target since I began with Crypto Banter, and I outlined this on pretty much my very first show. Main target, pre-COVID levels coming in between 3,200 and 3,400. I don't think anything's over until that level gets hit. So you can actually trade this, and I'm going to show you how in a moment's time. Stock market is a little bit cleaner than crypto at the moment with everything that's going on with these massive different funds that are going bankrupt and exchanges running away with money. It's been absolutely wild. So I'll show you how to do that in a minute. Okay, looking at this chart on the daily very, very quickly, only point that I want to make, underside resistance, keep an eye on that. You would expect that a push into that, and you can see a perfect wick into that zone. Have a look at the clear levels that we reacted over there. June lows, reaction again in the September lows. Again, that scary wick in October, and then we lost that level, and now we've wicked directly into that to the exact T, which means that it is starting to use that as resistance. And if that is an SR flip, so from support into resistance, you expect further downside from that. Keep an eye on that. All moving averages are down, price below. Those are going to start to expand as they start to open up. The expansive move becomes more aggressive, and that's when volatility, of course, kicks into the market. One more thing, yes, that I wanted to mention. I almost forgot. Actually, two more things. I have one bit of hopium for you. But first, last chart of doom, and then we go into the hopium. Last chart of doom is the VIX. VIX continues to contract. S&P 500 coming into resistance with a contracting VIX means when it hits that resistance and it starts to turn back over and the VIX kicks up, that's going to be massive volatility to send the stock market down. Now, the only hope that I have for you is the DEXI. And the DEXI, the dollar index and risk on assets they're not like inverse to each other at all times. They can technically sometimes do the same thing, meaning that the dollar can run up while crypto and stocks run up as well. The dollar can crash down while crypto and stocks crash down as well, contrary to popular belief. By the way, that is a possibility. Now, when you look at this, it has officially lost that key level of 108, which was a very important zone. It's still following our lines almost to perfection. And I said, if you were a crypto bull, this would be something that you would want to see. You want to see it reject. You want to see it lose all these levels. The lines are following perfectly. Wait for it to come down. Wait for the next bounce. The next bounce will create some sort of a pullback in crypto. And by then, you've hopefully set in your low. I don't know how long this is going to take, but by then, you've probably set in your low. And then you'll have an opportunity to buy the next higher low, which would come with the DEXI pushing towards the upside. So this is the only hopium, is that this level gets lost and the dollar continues to sell off, creating a new downtrend. But be patient, because when you look at things like the dollar on a very, very high time frame, like a 6-month chart, let's just clear this all up. Let's take everything off. when you look at it like this is still a bullish formation, and you would still expect higher prices. The 6 month has a whole month to close. If it closes as a red candle, which is very unlikely because it has to come all the way down to about 104, I don't think that's going to happen. But if it does, then maybe things begin to change. This is probably going to close as a green candle. So just be cognizant of that. Okay. Next, low time frames. Now I'm talking to more the traders. So that yes, there are trade opportunities. You would essentially be looking again at this as the range, right? You had the main range that we had been stuck in for such a long period of time, bouncing in around this area, range high, range low, and then we proceeded to lose that level. Now, price is establishing a little bit of an uptrend on a 1 hour chart. You have low, higher low, higher low, and you'd expect this to push into the zone. But this is probably where your optimal shorting opportunity would come from. When price does proceed to push into this level over here, you want to look for weakness, and you want to look for a failure back into the range. So it fails to get back into the range. It comes down. That's an opportunity to start to build your short position and build it, build it, build it. And now you can move your stop losses as it comes back into this trend line. Price comes into the trend line, bring your stops down. If it breaks that trend line and takes out the low over here, then you know you're going to be in the money. Then you're in the money, you start to compound, add more to your position on the next level, and then you start to work back down towards the first chart that I showed you when we're in the third range, and you're looking for mid-range of that range 3, which is 11K level. That is basically the way that I'm looking at it. But when you get to these extremes, you have to be very, very careful and very, very sharp as a trader with taking shorts. If you don't know what you're doing and you haven't done this before, you're going to get wrecked. 100% you're going to get wrecked. Don't do it. Rather just practice with a demo account and learn over time. So that's it for that. Trading competition. I've worked my way up to 7th position. That's me over there. Haven't taken too many trades. I took one trade yesterday to get me from 11th to, I think I was 8th. And then one guy obviously wrecked himself. So I've jumped up a spot without taking a trade, 7th position. We'll see. I don't think I'm going to chase this guy at 1,000%. I really don't know how he managed to do this with proper risk management. We'll see if he can stay there the whole competition. If you're watching this, whoever you are, mo@gmail.com. Best thing you can do is probably not take another trade. You'll win this competition. If you win this competition, you get $15,000. First place prize, $15,000. So beautiful, beautiful, beautiful incentive over there. Playing it conservative, and I'll keep you up to date on that. If you do still, by any chance, want to join this, I think there's 3 weeks left. It's till the end of this month. There is a link below which will take you to the competition page. Now, with Prime XBT, you can trade CFDs, which gives you a bunch of different stocks. You got silver, you got different indexes, S&P 500. That's what I'm using it for over here. I will be taking a short trade, as I mentioned to you on the previous chart, where I'm looking for that reactionary area. I've marked it out with the purple levels over here. You'll notice, I know it's a bit small. Let's zoom in over there. You'll notice the inefficiency candle over here as well with the strong sell-off. This is where I'm going to be watching today for some sort of a reaction. If price starts to fade from there, I'll be entering a short position. By the way, on Prime XBT, this runs at a 5x leverage. So you can see prices almost coming into that zone, and we'll keep a close eye out. I will update you all. Let me know on the Discord in the general chat or the trades group, whichever one you want to use. If you are interested in trading other asset classes other than crypto, of which Prime XBT is probably one of the better ones to do that on. They do have an insurance fund and stuff as well, so you don't have to worry about them running away with your money. They have already reached out to us, and they will be providing proof of all of that, of the insurance funds and everything, that funds are safe. But this is the one that I used to trade that on. The link is also in the description below. And I think that brings us to the very end, guys. So everything is in here. If you do enjoy these videos, please do me a massive favor. Give the video a like. Also hit the bell notification if you haven't already, so you can be notified of when we do go live. And subscribe to the channel. If you're not yet subscribe to the channel. I think over 90% of you are already subscribed. And thank you all for watching. I appreciate each and every one of you. I receive tons of support, tons of messages. I do read them. I promise. I'm just apologize. I can't reply to every single one. If I had to show you my inbox, I'm receiving hundreds of messages a day. It's absolutely crazy. And that's it, guys. Let's continue to crush it within this market. I think we've done phenomenally well. We've nailed it for months now. And together we can go far. So I will see you all on the next video. Have fun, stay safe, trade well, and have a solid weekend. Cheers for now.